Welcome back to Fast Money. Stocks getting slammed today with the S&P 500 notching its worst day in more than a month. And today's sell-off has Dan Nathan putting on his technician hat. He's flagging the three most troubling charts in the market. But he is not alone on this one. This is a Fast Money Technicals tag team. The chart master, Carter Braxton Worth, is also standing by to see if there's really trouble brewing in these charts. So, Dan, why don't you kick us off with the first chart on Exxon?
First disclaimer, I learned everything I know about charts from Carter, so let's just get that out of the way right now. This is kind of good, the bad, and the ugly when we think about the three names we're going to talk about. Let's talk about Exxon first. This stock is down 50% on the year. This thing hasn't seen an uptick in like 3 months or so. To me, I go back and I look at that low from the spring at 30, and I say to myself, oh my goodness, if that thing breaks, it's about 10% away. That takes you all the way back to the 2002 low. And I say warning bells are going to go off in the energy complex. So I think you got to keep a really close eye on this Exxon chart right here in that $30 level.
Carter, what do you tell your grasshopper?
Sure. Well, I mean, I can't disagree if everything he knows is for me, kind of in a box there. But hey, listen, the key is this. Does Exxon break its March low? One way to figure that out, of course, is look at other big integrated. So we know that Royal Dutch, for instance, is right at its March low. Dan just mentioned that Exxon is 10% above. We know that BP has already broken that March low, and it's about 10, 12% below. Chevron's much higher above. In any event, the issue is this. When you do hover ominously just above a prior low, and other stocks in comparable positions have broken or are on the cusp of breaking, the bet is that it does break. So I'm with Dan here for sure. Lower prices for Exxon. What it means for the energy overall, remember, the entire sector is only 1.9% of the S&P. And two stocks, Exxon and Chevron, are half the weight. It's almost not even a sector anymore.
All right. Dan, the next one of the big bank stocks charts. So what's troubling you about this one?
Yeah. So if Exxon was the ugly, this is kind of the good. It's Bank America. This thing is down 30% of the year, but I think importantly, it's up about 38% from its March low. It's making what I think some technicians would call a little bit of a wedge. Carter would say that tension is really building here. But to me, you know, there's a lot of optimism about this group. They actually act pretty well over the last few months. But I just feel like a break of that uptrend from the March lows, and I think you have a lot of these money center banks following suit, and then you put that together with some of these names like energy, and then you got financials just not acting well. I think that is the risk right here about a cyclical trade in the market that a lot of money wants to rotate into.
Well, what Dan characterized it is just that. It's a wedge or a triangle. What it represents is a standoff, and he used the word tension, meaning you have converging trend lines, and Dan's drawn those lines in a converging price range. We know that the stock is sitting here basically in the apex of that formation, and typically you get a fairly dynamic resolution up and out or down and out, a breakdown or breakout. Now here's the interesting thing. Here too we can look for precedent. We know that Citibank has already collapsed down and broken out to the downside. JP Morgan, however, US Bancorp, PNC, and most other banks, the BKX, the KRE, have broken to the upside. I think BAC, the bet here is that it will likely get resolved up out of the wedge, the triangle, not down.
Difference of opinion there. Dan, you're looking at Walmart next.
Yeah, so this would be the good right here. So let's go back to July, and you look at that ramp. It went up about 10% in a straight line, and then it kept on kind of notching higher. It got as high as 150 here. If you draw a line from that July level up until where we are right now, where it kind of tested there today, I'd say that's a really key support level for a stock that's acted very, very well throughout this pandemic. You know, one of these names that for a lot of fundamental reasons people have been excited about, and we know that that move back in July is when they announced Amazon Prime, Walmart Prime to compete with Amazon. So, you know, you've had a lot of really good fundamental news in the name, but it's starting to kind of labor a little bit here and break that recent uptrend over the last few months. I just keep an eye on some of your best names because they run the risk of also breaking down.
Well, I mean, that's exactly right. So, you know, it's funny. I had a teacher and mentor some 30 years ago, and he said to me, if you can draw a straight line, you'll probably be okay in this business. I thought, my gosh, he doesn't think much of me. But the truth is he was being very candid and honest. And Dan's drawn a straight line. So what we know is this, that the stock got re-rated aggressively higher with the 7th of July. It was its news that it would compete against Amazon Prime. And if you draw a trend line along the sequence of higher lows, we are flirting with either holding or breaking trend. I think Walmart holds here, and my inclination is to be on the long side.
Okay.
Maybe just to end, I've got one chart.
Absolutely.
What's maybe one of the worst charts out there, and maybe you can see it on the screen here. This is MSG Networks. This is, well, if you were to define a downtrend, you'd probably use this as an example among others, but it's an unrelenting circumstance of weakness, both absolute and relative. There are other stocks like it, but this is especially bad. All
right. Carter, great to see you. Thank you. Carter Worth, Cornerstone Macro. A lot of charts to go through. Tim, I'll go to you. Which one caught your fancy?
By the way, the movie's called The Good, Bad, and the Ugly, not The Ugly, The Bad, and the Good. So yeah, Dan needs to get his Clint Eastwood down. But it was a good exercise, and I'm a Walmart fan. I believe there was re-rating on July 7th. I believe there was a dynamic that's been also, we talk about these trends of acceleration because of COVID, and that's what's going on with Walmart. The digital e-commerce business is soaring. There is a tech company in the middle of the biggest brick and mortar retailer in the world. And I think that's part of what you're excited about. Look how defensive it was on a day. I know it's not just that COVID trades of yesteryear are good trades for an uptick, but I think Walmart has done the fundamental work here, and the chart looks decent.
Karen?
Well, you know, I used to not be a believer in charting stocks, but I've actually come around. And one of the reasons is if enough people think there's merit to it, then there is merit to it. So also, I like it when they agree with positions that I have, which is Bank of America and Walmart. I still like them both. Walmart for all the reasons that Tim said, and it has this sort of stay-at-home trade, but also a reopen trade or a stimulus trade, and it's not crazy expensive. So I like that. Exxon Mobil, not for me.
Guy, what do you think of Dan's work? I thought he did quite well with his teacher.
Tremendous. Tremendous. I mean, you know, as I've said a multitude of times, Carter Braxton Worth, you know, he's on the Parthenon of all things,
Pantheon,
being,
Parthenon,
you know, technician, and, you know,
Pantheon.
that too. He's on both of them, as it turns out. I'll say this as well. I don't know why he's speaking to a grasshopper. I didn't understand a word you were saying there. But I would like to go off the board for 500 and say that I'm surprised Dan didn't bring up Wells Fargo being the ugly, because Wells Fargo is an unmitigated disaster. And now it's within 70 cents of, I think, taking out that March low of $22. I mean, that to me is the one that I think people really got to start to look at and say, what's eating, not Gilbert Grape in this situation, but Wells Fargo, Melissa.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.